Hi everyone, welcome back to my channel. My name is Phi and this is Money Phi'losophy. Thank you for coming back for another day of Tesla analysis. Today we will go over two things. The first part of the video, I will go over the new proposed EV tax credit that has been circulated and discussed over the last few days in the Tesla community. The second part of the video, I will go over technical analysis just as usual. But I do want to spend some time on the EV tax credit and lay out for you guys the summary points and some of the details that might be affecting all of us here as future consumers of EVs, particularly Tesla EVs. I will also want to look at the implications of all of these details to Tesla stock price so that all of us out there as Tesla investors, we can have a holistic view of what this proposed credit could do for Tesla or hurt Tesla in the near term. So let's dive into the detail. But first, if you are new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. So here's the proposed text of the recent infrastructure financing and development. So here is the proposed legislation of the infrastructure financing and community development. The part that is relevant to EV tax credit starts on page 282 of over 600 page worth of legislation here. And I do want to summarize for you guys what are some of the details that might be affect us as a potential purchaser of an EV tax credit. So here is the summary that I put together that contains the relevant provision. So you can see that the base amount for the tax credit is $4,000. The battery capacity tax credit is $3,500. If the car meets the domestic assembly qualification, it gets another $4,500, and then if it meets the domestic content, it would have another $500 for a total of $12,500. Domestic assembly, and you might have heard it from multiple other channels, that this is basically that the car need to be union made. So the definition for domestic assembly is final assembly of such vehicle occurs at a plant, factory, or other place which is operating under a collective bargaining agreement negotiated by an employee organization. This is a classic definition of union. Interestingly, it has the word domestic assembly, but I do not see any kind of reference that the plant or factory or the production thereof has to be in the US. It is not part of the definition at all. Domestic content credit, which gives us the $500 here, states that it needs to be assembled by a manufacturer which utilizes not less than or at least 50% domestic content in the component parts for final assembly of such vehicle. And the vehicle need to be powered by battery cells which are manufactured in the US. So you can see that Tesla does not have a union by definition, so it would not get the $4,500 per vehicle tax credit. So if we are buyers of a Tesla EV, immediately we will lose that $4,500 tax credit, and our tax credit will become only $8,000. It is still a substantial sum, and for those of us who love Tesla as an EV, would not mind losing out on this $4,500. Let's go through some of the limitations that it has here. So there is a MAGI limitation and an MSRP limitation. The MAGI limitation is basically the limitation on modified adjusted gross income, and you can ask your CPA on how this is calculated, or you can go through the text for details of how the MAGI is calculated. But basically, if you have a merit filing jointly tax return, your MAGI cannot exceed $800,000 a year, and head of household $600,000 and $400,000 in any other case. Now, interestingly, you can take your MAGI for the prior year or the current year in which you purchased the car. For example, if you purchase the car and take possession of it on January 2nd of 2022, you can take the tax credit based on your MAGI for 2022 tax year or 2021. Now, the credit is reduced by $200 for each $1,000 above this threshold. So if this couple exceed the threshold by $40,000, then the credit will be completely phased out, which means that this couple's MAGI cannot exceed $840,000. Otherwise, it would be completely phased out and they would not get any of the $8,000 tax credit. Similarly, the threshold would be $640 and $440 for the rest of the filing categories. So next, let's take a look at the MSRP limitation. These are the threshold and the limitation for the MSRP price of the vehicle. If it is above this threshold, then the owner or the buyer of such vehicles would not be entitled to the tax credit. So it's important to note that a sedan needs to be less than $55,000, a van needs to be less than $64,000, an SUV needs to be less than $69,000, and a pickup truck needs to be less than $74,000. Once again, these are provisions that are proposed right now that could be a subject of negotiation as the bill continues to make it to the House and the Senate. It is important to note that the MSRP limitation is dependent on manufacturer suggested retail price, not an all-in cost. So this is fair, right? Because if you live in a state with high sales tax, or if you have to register with local DMV or state DMV that charge an arm and a leg, it does not affect the ability to get the tax credit. So I went ahead and went into Tesla website to kind of play around with the number, and I can see that the cost or the MSRP to purchase a Model 3 with full self-driving costs about $50,000. The limitation is $55,000. So it comfortably afford a typical American a standard range Model 3 with full self-driving. Now, if you are looking at a Model Y and you notice that I add colored in here, I also add 7-seat interior in here, just a little bit more selections just to see what the price comes out to, and it comes out to about $68,000, which is also well below the $69,000 limit. So needless to say, full self-driving could be included, and it would still, and the Model Y or a Model 3 would still make the limitation. However, if you're looking at a Model 3 long range or performance, I'm testing out long range here, and you include full self-driving capability in there, you would be well above the $55,000 MSRP. So the key is probably not order your FSD together with your Model 3 long range or better, so that and you can add it on later if there is such an option. It looks like today, if you order the Model 3 standard range or a Model Y long range, the delivery date is in February of 2022, which means that if the legislation will pass for January 1st of 2022, the new car that you order here, by the time it's delivered, it will meet the threshold and the limitation necessary for you to claim the tax credit. So just some food for thought there. But that gets me to my next point, which means that if the vehicles are going to be delivered in Q4 of 2021, there is no reason one who is otherwise qualified for the tax credit would accept delivery in 2021, because if you just wait and take delivery on January 1st of 2022 or after, you could get the tax credit, assuming you're otherwise qualified, of course. So this could have a little bit of an impact on Tesla Q4 delivery result, and whatever Tesla misses in Q4 of 2021 could create a pent-up demand in Q1 of 2022, demand and delivery. So I do think that there's a little bit of a short-term negative impact on Tesla delivery number. It shouldn't really impact the company fundamental at all, but as a short-term concern for traders and for Wall Street analysts, I do think that in Q4, Tesla could take a hit when it comes to delivery number. Now, do I think Tesla can make the at least 750,000 vehicles or even up to 850,000 vehicles delivery for the year? I absolutely think so. I think there are a lot of people out there that wouldn't mind foregoing the tax credit to the extent that they can afford it, or they could otherwise not qualify for the tax credit, and so they would still take delivery early. But for a lot of us who are qualified to take the tax credit, I think that we might have a little bit of a delayed gratification waiting for the tax credit. The second thing that I want to talk about is the battery production. We do note that Tesla does need to have battery production in the US in order for its buyer to qualify under the domestic content provision, which give us an additional $500. So right now, the vast majority of Tesla battery is produced by Panasonic, which has an operation in Las Vegas, Nevada. But in the future, if Tesla chooses to shift that operation or have an additional operation in Giga, Berlin, that could create issue and could potentially reduce the overall tax credit for a future buyer if the battery is produced outside of the US. Now let's get back to technical analysis here. Today is September the 15th. Tesla closed the day at $755.83, up over 1.5% from yesterday. The daily candle does look very promising. As you can see here, after consolidating yesterday, it started moving up a little bit today. It spiked through a support at 746 in the morning, and now it ended the day at 755. I do expect Tesla to get to 768 tomorrow and potentially 793 by the end of the week, assuming the bullish momentum continues. If you are looking at the last few weeks from August the 17th until now, this is also a bull flag. And I would say based on a very rough estimate here without drawing it, I think the first price target would be 793 and the second price target would be somewhere around $840. We also noticed that there is a strong support at 200 days SMA and 50 days SMA. The golden cross was formed a few days ago, but right now the two lines are still moving in parallel with each other. The strong support right now that I can see is about $695. So if in the near term, for whatever reason, Tesla drop, I do expect Tesla to bounce at $690 level. But as of right now, it is very far from that drop, so hopefully that we see more upside than downside. Let's take a look at the hourly chart. We can see the first half an hour Tesla moved down but never touched the bottom pivot at 735. It started moving back up, crossed through the middle pivot, crossed through 746, which is a decent resistance, and went all the way up. It also never reached 762, which is the top pivot line. So for tomorrow, the trading range is on the upper end, 768, which is also my resistance point here. The middle pivot point is about $750, and the bottom pivot point is $744. I think that with these pivot points tomorrow, Tesla could probably start the day somewhere around $750 and go all the way up to 768, assuming the momentum is there. Note that the volume today was 92%, so it is not average. It's slightly below average, but it's not too terrible. We've seen Tesla volume ranging from 50 to 70% in past days, so this being at 92% is actually not a bad thing. The weekly chart is fairly bullish. Once again, the last 3 weeks were interesting, with the first 2 weeks of the last 3 were bullish, and then last week was a failed rocket launch, which signaled a reversal. We did see Tesla move down earlier this week, but then start going straight back up. As of right now, which I know we still have 2 more days to go, the weekly candle looks like a bullish hammer. That is really good news for the bulls. I don't know if the bullish run will continue going into Q3 delivery result, which would happen on October 1st, or that we're going to retrace a little bit and start moving back up. One thing certain for me is anytime Tesla moves down significantly, I will be picking up shares, because I do think that 2022 will be a ginormous year for Tesla with the tax credit in play. It will be accelerating Tesla production and delivery. Especially Tesla is in the best position by far, to capitalize on an increased market share. When the population gets a hold of the tax credit that is effective 2022, they will start going out and shop for EV, because now it's not just a personal preference. It's not just a cost saving between ICE versus EV. They have an additional $8,000 to spend on EV. And if they've been on the fence for all these years or all these months, this is an opportunity for them to buy. And there's no other manufacturer out there that is positioned to mass produce EV like Tesla. I know Gordon Johnson say the competition is coming, Tesla is losing market share and things like that. But as of 1/1/2022, when the tax credit is fully available, do you think Ford and GM would be in the best position to capitalize on the market with the mass-produced vehicles that could fit the MSRP limitation? I don't think so. So Tesla is uniquely positioned by far to capitalize on the market within the first 2 years of those tax credits. So I do think that $900 is just around the corner, and it could easily be achievable by the end of the year. So this is it for this video. Thank you very much for paying attention thus far and for supporting the channel. I've had unbelievable growth in the last few weeks, and I really appreciate all of you guys. Let me know in the comment down below if you guys would be buying an EV as a result of this new proposed EV credit, and if so, and would you be more likely or less likely to take possession in 2022 instead of Q4 2021? Until the next video, bye.